Hi, I'm Greg Newman, Group Chief Executive of Onyx Capital Group, and welcome to the CEO's Address. We've had a great response since announcing retail last week, and we will be announcing the go-live date soon. Again, with this release, we can finally allow people to see what we are trying to do holistically with our trading and services here at Onyx. Now, last week I discussed the role of hedge funds and their impact on oil markets this year. But I also mentioned how we have had gossip and whining from some in the industry in response to our publishing arm, The Officials, which select individuals have decided to take out on our trading team. For the avoidance of doubt, we have a few separate arms to this business, hence the group, that are both autonomous and entirely independent to our trading arm. Evidently, there are those who don't like the increased scrutiny into how the oil swap and physical benchmarks are priced. And the latest incident was the largest of the PRAs, Platts, contacting us to complain about these same reports, but without specifying which reports or podcast when asked to do so. As I said last week, this is a classic oil industry move. All our reporting is based on facts, using publicly available information and by exercising freedom of expression. So today, I wanted to go deeper into this tension and discuss the challenges of bringing transparency into oil derivative markets. With me is the man who built the Platts indices that oil swap contracts and physical contracts price against, and who now runs the Officials at Onyx Capital Group. Jorge Montepeque is no stranger to receiving backlash, bullying, and even threats from a few bad apples in the oil market. Jorge, up to no good again.
Yeah, I wonder who's up to no good, but I can tell you that in what I have seen in the oil markets, in reporting and bringing transparency, there have been a few very bent out of shape, as you call them, actors or people that are not comfortable with the situation. And it has been very serious. From my time in Asia, where I change most of the pricing systems, I face yelling, non-stop phone calling, you could say psychological bullying. Of course, I'm super thick-skinned and I'm not aware of those things. It's just when I look at them back in retrospect, how hard it was. And some of my colleagues grew up with me in that situation. And every once in a while, we get together and we cannot believe the behavior of some of these people in the oil market. But it ranged from physical threats, some very serious, up to lawsuits. Some people really hate transparency.
So I think that's where we should start. I mean, for those who are kind of new to what we're doing, we talk about oil swaps and more physical benchmarks because they're very tightly linked. Why would people even care? Because from the outside world, this is a small market. This is relative to the bigger, wider physical and Brent and WTI. We've got this niche set of contracts that are essentially the wholesalers market, and the price setting of those contracts is hugely, hugely impactful. So essentially, a lot of money is made or lost. So we just explain that a little bit.
Well, on a high level, it's a matter of public interest. The benchmarks set off the price that an airline pays for the jet fuel to fly from A to B. It sets the price that a supermarket will charge you for your fuel for your car to go and buy your groceries. It will set the price for the heating oil to heat your home in the winter. So it's a global public interest. In addition, it will also set the revenue of Saudi Arabia, of any large producer, and of all the companies involved, from the production to the distribution. That's on the physical side. Then, of course, the professionals, and hopefully now retail, can take some hedging actions against the physical numbers. And then you have the swap underlying, which may be between 7 and 10 times as big as the physical.
So again, just to emphasize that, right? And it's even sometimes you forget it even when you're trading the market, that 10-cent move, 10 cents per barrel, which is nothing really. That is not 10 cents for the contract you've traded alone, or even the contracts that people in your immediate circle have traded. This is 10 cents on the whole world's oil, depending on the contract. But when you talk about dated Brent, which has been your focus lately with the officials, I think the estimates range, but between 60 and 75% of the world's oil, people say dated Brent is used to price for, right? So ultimately, a 10-cent move, or even like $1 per barrel move, which we've seen lately, that's $1 per barrel on all the crude that has been produced that day and sometimes that week. So you have to multiply that dollar by 100 million barrels a day times by, let's say the price has been moved for 2 weeks. You know, that's 14 days of 100 million barrels per day times by that dollar. So you're getting into the billions just by one or two individual price actions. You see what I mean?
You hit it straight on. For the sake of expediency, let's say that the oil market is 100 million barrels a day. So if there is a push price that is maneuvered by some companies or individuals by $1, that means extra 100 million that a consumer will pay for. And if you move it by $2, then it's 200 million in one day. You get to $1 billion within 5 days of pushing the market. So the amounts are huge and very impactful, from an individual in the street to the largest oil producer in the world.
And we have to, I just want to double down on that, because a lot of people say, oh yeah, you know, I don't even use a gasoline car now. So it doesn't matter, right? Oil, whatever you want to say about oil, it is used in every part of society. You've got to think about plastics, you've got to think about, as saying, heating, you've got to think about, you might not specifically have bought gasoline, but when you fly a plane, obviously, when you are buying goods from the supermarket, they're importing it from diesel-driven trucks, and oil is everywhere. So if you don't think it impacts your life, that's just, it's not true, right?
I wanted to go on that. Even if you try to detach yourself from the oil molecules, and you're trying to buy, let's say, organic bananas, my favorite example, those bananas need to be put on a ship that comes from Central America to Europe.
Ran on fuel oil.
That is run on fuel oil, then it needs to be cooled, and maybe there's a little bit of oil molecules in the cooling process. And then they need to put in a truck from the warehouse into the supermarket, and again, that's diesel. So it's very hard to run away from. And therefore, the duty that we all have, I think, in publishing and benchmarking is ensuring that the price is right.
Okay, so that's great. So that's a really good way of setting it out. So clearly there's vested interests, because there's a lot of money on the table, essentially. But there is a big divorce between the infrastructure and the individuals who understand that process versus people who just say, it's nothing to do with me, even though it is directly to do with you. So that's why I love what we're doing, because if retail, it's going to take a while for them to kind of get into it. But even if they never trade it, they can at least now start to understand what is going on specifically. And it should be reported more and more about what's specifically going on, because yeah, you might look at the trading volumes and go, whatever, like, but actually the impact on the world is so huge. So that's great. So then, you know, let's talk about what's happening right now. So with the officials, you've come out and it's only been going maybe 3-4 months.
Not even 3 months. Not even 3 months. We have barely passed the 100 mark in terms of editions. We have two per day. And we have been with a mantra of bringing transparency to this market.
So this is the thing. So again, for the audience, you know, you've done this for 30, 35 years. This is what you created, all these benchmarks at Platts, and then you reported on them. So I don't understand how you doing all that, leaving a legacy, that's the way that the PRA is ran, to suddenly, you know, you've not been there for what, 8 years, something like that. You come back and you start the officials. A, why is there a need for it? So what gap did you see? And B, why are people getting so bent out of shape? Well, surely you are just doing exactly what you've been doing your whole career.
Yes. When you publish, if you're in that business, you want to publish something that you reach to a market sector that is needing some type of information. What has become extremely clear is that in the publishing world, from PRAs to other entities reporting on markets, they're pulling their punches. They're really not bringing the transparency that is required to monitor and observe and interpret what the market is doing.
So what? But that's a change in the last 8 years.
Yes.
Okay.
When I was in Platts years ago, and I really don't like to talk too much about the past, it's about where I am now, right? But when I was there, I pushed for transparency in the organization. I enjoyed the job greatly. But of course, over time, there was a pushback by our customers at the time, who then pushed to their sales division, who then pushed to the bureaucrats within the organization about tone it down, you cannot use this kind of language, you cannot use this kind of word. And in my job then and my job now is about stating what is the truth. It's not about pulling it, it's not about using another word, it's not about using offensive words, it's about using the truth.
Okay. So again, so just to play on that a little bit, so the boom of data sales, right? This has probably been, of course, for probably 20 years, but it's really, really picked up in the last 10 years. The valuations data businesses are getting, every business wants to be a data business, including us, right? For that reason. So ultimately, you're looking at a very high margin business, above 50%, would you say, like on a profit basis?
Yes.
So above 50% profit margin to sell
Over
data.
that.
And then you're doing very well. You are a must-have in the industry. The publishing data that is used to price contracts all over the world is trusted and reliable from what your work has been done. But then it gets to a point where you have to, this is the society we have, right, in the capitalistic world. This is some of the downsides that can happen, which is we're hitting this margin, but we've got to keep growing. And we've just acquired a huge business. So we've got to fund that business, justify that business by making more profit, by the synergies and all the rest of it. So there's a big push to keep making more money. And it just means that the more money you have, the more money you're at risk, especially the company being so valuable and the shareholders' concern or whatever, that it becomes harder and harder to tell the truth if you think it's going to affect your sales, right? I mean, that's a fair statement, but let me just finish it. It's like, well, that would be okay if you could say, but the audience is enormous. But the audience is not enormous. You're selling to a sub-strata of like the world, basically the oil trading community. Even though this data is pricing the entire world's oil, you have to buy this data, and it's bundled in with all these other services. You're paying a hell of a lot of money for this data, and you're reliant on a few huge companies to pay that. Otherwise, your company starts to basically be under pressure from a profit basis. So that's the explanation I would give up front.
Yeah, I want to go into two lines that actually converge. One is the market participants. They have, you could say, an exposure to transparency because they don't want to have their name plastered in the newspapers. So they want to protect. They want to be opaque. And that's the pushback we are getting with people actually not calling me, not contacting the officials, but the rest of the organization to say, keep it down, essentially.
I want you to keep this train of thought, but just one thing. I looked on the internet, like people are always in the news because it's publicly available information when you're bidding and offering cargoes that are used to then set the price. So it's all over the news all the time. Every day it's reported. So, and then I look back at 2012, 2013, when I first started trading, I saw the NAPFA team saying, oh, a trade house has just been blocked from the tendering process because as Jorge said, no, they're out because they had said they were going to buy a bunch of cargoes. That was used to set the price. And then they didn't actually take delivery of those cargoes. They reneged. So you're like, well, we can't have that because that was used to set the price that impacts the end user. So that's it. You're not involved anymore. That was commonplace. Now all you're doing, you've literally just gone, yeah, so public information, well, that guy bid this, that buy offered that. And this is what I think about it. And suddenly that's taboo. But yet people getting kicked out before. So this is a big change.
Yes, right? Yes. It was a big change with the system softened up. And every company has the right to do it as they want to, right? As we have the right to bring the light into those market practices. So they can run certain way, we can run certain way. But what I am saying is the industry then reacts because they like the opacity. They're more comfortable.
Or the status quo.
Yeah. Under a rock somewhere or in a corner somewhere where there's not too much light.
Can I quickly counter that as well? Yeah. Just because it's not actually true that it's like, I want to get this clear as well for the audience. It's never us saying it's the whole industry. No, it's not. No. There are some great people here, fantastically intelligent people here who believe everything we believe. it's only a few bad actors at any one time, and it's usually, it's kind of sparse, and usually it's when these companies are potentially desperate. They might be losing a lot of money on their position and need to react or whatever it is. But we are by no means the only ones that complain or talk about these things. And actually, the traders themselves do it. So there's reports, again, you just have to look online about all the, obviously, regulators getting involved. But forget the regulators, the oil traders themselves. There was all this talk. Total Energies came out and said the benchmarks are distorted. I mean, distorted. That is a very clear word about what the benchmark, the perception of the benchmark is. That is a counterpart. This is not being necessarily from just like a collective industry and community saying, let's screw this everyone over. They're not doing that. This is one or two bad people at any one time. But actually, collectively, people don't like disorder either.
Yes.
So let's get that clear, right? We're not talking about the whole industry at all.
Correct. So we have seen great efforts by the industry to clean up the benchmarking practices and reform systems. But we are also seeing right now that the systems are actually not aging well. In fact, nobody does. So the volatility in dated Brent, for instance, to use an example, has really gone out of the normal boundaries in the last 3 months. We had a bout in February, earlier this year, and also what we could say erratic behavior since June this year, where we have seen, for instance, 40s being offered at 40 cents premium over dated Brent, and now bid over $1.50 over dated Brent. And the overall supply in the world hasn't changed massively. So in fact, you could say we're longer now than we were at the beginning of June, yet the bids have gone sky high.
But let's be clear though, I mean, this is the whole point of a benchmark is to say, let's choose, we can't benchmark the whole world.
Yes.
So let's use a particular region and price that effectively and use that as a reflection of the world. So if there are local issues and local opportunities, then that is what it is. It's not like you can say, I mean, you can use it as a reflection, say it's overvalued or undervalued. But again, I want to make the point as well, trade houses, majors, they are just doing their job, right? They are ultimately trading the benchmark with the methodology that's in front of them.
Yes.
So we need to be clear about that as well. I mean, they can still change the methodology then. If I can do it, then I'm going to do it.
I could just go quiet and let you go with what you're saying, because yes.
Okay.
A trader and a company will use the means available to their disposal at the time. They have a system and they can bid an offer within that system. And that system then yields some results. What we are saying is the results the system is yielding is too erratic. And there needs to be a reset, another view of it, because there will be, in a way, natural excesses by the traders that may even be inclined to misuse the system.
Okay. So why don't we talk a bit about what you're trying to do now then? As in, you're starting off with the officials, and it's really been about transparency to begin with, but you are also involved in publishing your own prices.
Yes. With the officials, we are trying to give direct information, quickly absorbed, hopefully, by the reader, to reach them on the key points happening in the market and any exposure their companies may have. Because we have observed over time that the top layer in management in a company is usually the least informed about the intricate details in trading. So our publication is aiming to reach that high level part in the company. In some of the stats we have seen, over 8% of our readers are founders, CEOs, and managing directors. So I think we're hitting the right spot. So it's about alerting them of anything that is happening in the market that actually can eat their cheese, so to speak, and then also giving to the traders the main highlights economically. We are trying to combine oil market with macros, because the macros tell us the big direction in the market. If you, or I would tell the reader right now, there has been a line over the last 3 months which is China is heavily underperforming. And this is leading to a way down into the market. Companies are making big decisions on old data while we're trying to present current data.
Okay, so let's get a bit technical as well. And this is the challenge for us with media. We have so many varied audiences. We're trying to, have different shows for different people with different understandings. But I think for this one, I do want to get a bit into the technical detail that some people might find they can't really follow because it's technical. But
in the North Sea, production is falling year on year. And the smaller the basket is physically, the easier it is to squeeze it.
Well, the easier it is to get the oil out of the region and then say, I still need oil, so I'm going to bid it in the tender windows, and that's going to create a high price for that region, and then that region's used to set the global benchmark, and that's what you're getting at, right? Just to be clear.
Just to be very clear, I have been in Platts for such a long time, and one of my worries every day was there's so little oil, is somebody going to squeeze it?
Okay, yeah.
And they did.
I was just defining what that means.
Yeah. And they did. They bid and were willing to pay high prices for something that was very short and dear.
Right.
So the job then that I had at the time was to inject additional barrels into that basket. But over time, whatever you inject declines, the production declines, and that continues to happen. So Platts or whatever publisher needs to inject more barrels, and they injected Midland. But then you have an issue of compatibility. Some crude oils trade FOB and some trade CIF. Or they trade FOB, but in a very different location and in a different timing. The main problem the benchmark has right now is an incompatibility in timing, because dated Brent is up to 30 days forward. And the trading of Midland FOB on an open market basis is incompatible with that delivery. Mm-hmm. So that gives optionality to a few actors that then can elect to either bid for it, for something they know is loading and is already committed, or to offer something they themselves have put on a ship for a different area. Yeah. As I understand, very few of the cargoes that are being sold on a CIF basis actually come to Europe. Mm-hmm. They're rerouted, they're booked out. So this is entirely legal, so to speak. But the question becomes, why are they bidding so hard on a CIF basis if they actually don't want the barrel CIF Northwest Europe? Mm-hmm. And that's where we have seen huge excesses in the differentials over dated Brent in the past 2 months.
And I guess that variability, it means that traders are aware of this and they are essentially worried in their positioning. So you could comfortably be short, so let's say dated Brent, if you felt was oversupplied, you didn't see how the oil was going to get in. But when you have such a variable loading program from a different continent, you are basically more worried. So you're saying, if I'm going to be short, I'm scared, and if I see a change, I'm going to start buying it all back. So that's volatile derivative price action as well, which in turn makes it harder to trade, which in turn makes the benchmark more volatile. So I was talking last week about hedge funds creating bad volatility, because good volatility for a trader is trending and high range, right, and predictable. But this is the type of thing where we would say, look, it's so hard to predict because one slight change, as you're saying, from a couple of people who can control this trade route, it's just too volatile. It's too much of a concern.
Yeah, I think in the way I would like to put it is there's market volatility and there is manufactured volatility.
What I was getting at the point, it might be manufactured at the physical pricing part you're saying, but I'm saying for the traders, even us, we're trying to position, predicting forward flows and positioning, predicting where the benchmark is going to go. And ultimately, if it's going to vary so much and you are aware of how much it can vary just with one or two cargo changes, then it makes everything so volatile and difficult to predict. So you can have a fundamental based view, you can see where things are going, and then suddenly whack, and that's happened, and they will go down the other way. And it's happened like 3 or 4 times this year.
Yes. One of the things I want to do as we go forward in time is to do an analysis on the volatility of the dated Brent differential since we added Midland to, to the benchmark. I don't think it's working as anticipated. I think it's making trading and has an impact on the end user that is quite large. And I'm very open. I think it needs a reset, a revisit of the issue. And I hope the industry gets together and do it. It has nothing to do with us, really. We're just reporting what we see, but to me it's evident that the volatility is too excessive.
So I think that's pretty comprehensive overview. So given that this is your focus and the response has been because of this focus, let's revisit, who those people are, what's going on, what are the recent tensions?
Yeah, there are two types of tension. One is from the named trader that is comfortably bidding and offering or paying high prices, but somehow they don't want to see in a report that they are paying high prices, which I struggle to see what their issue is because it's factual. But what really surprised me was the call that a sector of Platts had with our compliance and risk department.
On the trading side?
Yes. They didn't call the publishing side, they called the trading side to complain about an unnamed report that I guess was making them uncomfortable, and maybe some podcasts that were making them uncomfortable. And I always saw Platts as a defender of freedom of expression and a defender of competition. Because for Platts, they're so large that they were always sensitive about being seen as a monopoly. And therefore, it was very critical for them to ensure that there was competition and nobody disturbed potential competitors. But then we had them calling the trading side, I guess, to put pressure on the publishing side, which is totally autonomous, and even telling them that we, for the sake of transparency, they said that we should stop publication, which is totally like 1984 language. I was very surprised by that. And anyway, for what it's worth in this forum, I would like to make an invitation for Platts or for the industry to come and contact the officials directly to address us, because we are autonomous in this organization. And if you want to discuss an issue that is bothering you, please come directly. If you want to do it on camera live, we'll grant you that opportunity. And if you want to have a quiet word, we will grant you that opportunity. In fact, we want to have that discussion with you.
So why do you think, I guess we mentioned at the beginning, but breaking this code of silence? I mean, Javier Blas called it a while ago, the omerta.
Yeah, that was a very famous article the man wrote. I think it was a little bit toppy, but never mind. It's a good term. There is comfort between the industry and the publishers, where they live off each other. The industry needs the numbers from a benchmark producer, and the benchmark producer needs the information from the industry. So they can take that tension up to a level and then they cool it. So it's almost a symbiotic relationship. But I think the publisher needs to have a higher moral point of view where it really can call it as it is. And we come in here trying to achieve that full transparency level, and then we're getting the brickbats.
Mm-hmm. But as a general concept, like I talked about last week with people gossiping, getting upset and all that, well, what is that? I mean, if you explain this to someone outside the industry, they just don't understand. If it's publicly available, and I don't know if it's satire if on the one hand with Woo Fridays, or it's something very serious from the officials, but it's just speaking about what you can see in front of you. Like what? I just don't understand.
I struggle to understand as well, but essentially, I think the message is, please shut up and get out of here.
Because we're all making money and we just want to keep going and it's easy, it's comfortable?
I mean, I really, I don't understand.
Okay, I think to be fair, my judgment on it is status quo, and people can get bogged down in the status quo, and it's inefficient over time, but people take a while to understand that, and it takes someone to challenge it, or people to challenge it, a community to challenge it before any real change is made. So maybe we don't want to go too harsh. This is just natural human behavior to some extent.
And maybe if you want to get super philosophical, systems always need to evolve, but the status quo doesn't want it to evolve.
Yeah.
And for a system to evolve, it needs to be challenged. It needs to be maybe in a way rip apart.
And there needs to be demand for it, right? So
Yes.
again, at the same, like, we're out here thinking this is just us. No, not at all. Most people, most of the feedback is very positive. And most people say, yeah, this is making my life easier because you're actually highlighting some of these things.
Our reports are read by thousands of people per month, thousands.
But you actually get reach outs. I've had reach outs, people saying, generally speaking, what you guys do is a good thing. We even had it in the comments on YouTube. If you're helping the wider, if you're democratizing, level the playing field, I struggle to see how that is a bad thing. However, if it's really not wanted, then it's not wanted. But I
Yes.
don't think the evidence says that. I think the evidence says people are very interested, very keen, and it's only the beginning of opening it up. And again, as I say, retail, and we're going to have an investor offering too. This is the journey that I think the industry will be on in the next 5 to 10 years, which will make people increase their demand for transparency, not reduce. You see what I mean?
More competition is better. Evolution of a system is what every system requires, and will help with that.
But my point is, if people don't want it to change, then it won't. But I do think there is a lot of people who do want the change.
I think so.
Yeah. Okay, thanks Jorge very much for that, and like a very, very interesting discussion. And there'll be plenty more to come. Audiences, thank you very much for listening. Again, check out the officials. It's still free right now on LinkedIn. Jorge's profile, it's on the onyxhub.co as well. And I'll see you again soon.